Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1081st edition, rock and roll, of Short-Term Trading Live with Oscar Carboni. 1081 instructional videos. These videos can really teach you the art of technical analysis, traders. Go back and look at my site, livewithoscar.com, or watch this video right here. These will help you in learning the art of technical analysis. All right, so 1081st video is being filmed on Wednesday night, and that will be for trading on Thursday now. Imagine that. This week's moving along. This video is being filmed on Wednesday night for trading Thursday. That would be September 26, 2013. Now, before we proceed, we know that futures trading can be extremely risky and can result in substantial financial loss. If you don't know that, you should. And certainly, you should know that futures trading is not suitable for all trading accounts. All right, traders, here we are. Wednesday night for trading. Thursday, I'm showing you the emini S&P. This red line represents resistance. Resistance is something that stops a market and makes it have a pullback. Now, the resistance is generally filled with fundamental reasoning, but it shows up really well on a graph, on the chart. And we are technical analysts, and we are very good at calling what should happen tomorrow based on looking at these daily charts. So we look at dailies, weeklies, but this is a daily. So traders, the red line represents resistance. As you can see, you hit the red line and you pull back. Boom. Hit the red line and you pull back. Hit the red line. Perfect timing for fiscal cliff nonsense. We just filled the gap, literally the gap that was left open in the S&P. We filled it today, gap filled. But it looks like there's a little more coming. You would like to see the gap filled and have an up day at the end of the day. We did not. So the gap will likely produce more downside. And right here, you did breach this yellow channel, traders. So look what you have. Resistance, pullback. Resistance, pullback. Resistance, breach this channel that we've been in for quite some time. Pullback is on its way. Now, maybe you come down here. Maybe not that big of a deal. Maybe we could do it in 3 or 4 days and get this fiscal cliff nonsense cleaned up. We'll see. We're traders who take this one day at a time. But that's what I'm seeing in the emini S&P. Now, of course, if you want to get really short term, there is this that's brewing here. You can call it a very small but certainly defined head and shoulders up here. If you just grab this and call it the head, you can certainly grab this and call it a shoulder, and maybe it'll expand down a little bit, but I don't think this is a topping pattern by any means. Just thought I'd show you that, look, we did breach. This is a full breach. When you breach a channel like this, you certainly do come off a little bit. So coming down here wouldn't surprise me at all. That's your emini S&P. Let's look at a few charts here. Okay, here you are. Dow Jones Transportation Average. Look right here. The same exact resistance pattern. Boom, resistance is hit, pullback. That same sort of line. And now S&P and trading are not the same chart. Granted, they're both indices. They are not the same chart. But you do have resistance acting the same way in both of these indices. Once you hit the resistance, you pull back. Now look, a full breach of this really well-defined channel, a really well-defined channel, a full breach of that channel. Now that should bring some downside. That's what happens. So you've got a full breach of the channel, and you should end up trying to come down here. And this is our leader, the Dow Jones Transportation Average. So for trading on Thursday at least, you got some downside coming from what I can see. Then there's your Nas. Let's go look. Traders, the NASDAQ daily bar. This would be this evening. Let's erase it. Let's go to Wednesday's close. And we have been in this really nice channel, and we haven't fallen out of it, but we certainly may come down to the bottom of it. Now, you had a bull flag here. It worked really well, but let's get that out of the way. That's a bull flag that worked, and now we've got a little bit of a different thing going on. You've got this. It's starting to get a little bit... It's starting to look a little heavy because you're breaching a lot of these small secondary channels, which then bring you to the primary channel. So the likelihood another breach here of support, another bounce off of resistance, breach of support, Let's see if we can come down to the secondary channel here. So NASDAQ looking like it may want to pull back to get back into the bottom of the red channel. More reason to think on Thursday we pull back. Traders, the Dow Jones Industrial Average now. Look at this chart. Dow Jones Industrial Average. Look at this channel we've been in. Unequivocally, you almost can tell what happens after you hit the top of it. Bingo, right here. That is likely what comes next. Now, of course, this thing can turn on a dime tomorrow. So have your stops in, and we are in a bull market. So be extremely nimble, traders. Do never forget this. Be extremely nimble when you are short in a bull market. Bull markets tend to turn around on a dime and have a day like this without you getting ready for it, without any reason or rhyme. Lots of times you get a massive turnaround day. I don't expect that happening Thursday, but always be nimble when trading against the major trend. Keep that in mind. All right, so Dow Jones Industrial Average looks like it will pull back to this question mark inside of this circle. Maybe it will. We're traders that take it one day at a time. We'll try this for tomorrow. Certainly we'll start off by selling in the Dow Jones, or at least the emini, S&P, and NASDAQ. Then traders, the last video I left you off with was gold. Let's go look at that. Here's your gold chart, the same one I showed you in last night's video, and I said that this market looks poised for the downside. Now, oddly enough, we went short the gold. It cracked, we got out. It went back up, we got short. It went up, we got stopped out. So we had, basically a pass out or a loss or a small win, depending upon your fills in the gold on Wednesday's trading for OMNI. But blessed by the S&P, thank you so much. S&P was very nice to us. NASDAQ was nice to us. We were able to pull off a decent day, even though the gold got a little tricky on us. But here's what I want to show you. You are still in the shoulder, even including tonight's action, which we should take out because we're looking at it until Wednesday evening. You are in the shoulder. No change in anything right now with the gold. Head and shoulders, bearish, comes down. Head and shoulders should be bearish. You are below this channel. So gold should come down. Watch the gold. Keep your eye on it. I would not fall in love with any major rallies. Then there is this. If you can even get up a little higher, you've got a wall of resistance right here. Why is it a wall of resistance? Well, let me show you why. I want to put two lines there because of how thick of resistance this is, and here's why. It's the top of every time this thing tries to move up. Boom, gets knocked down. Boom, gets knocked down. Doesn't even get there. Boom, gets knocked down. So if it hits, you'd expect it to get knocked down. At least that's your first thing to think. Now, let's say you can get above the yellow line. Look at this resistance here on this major channel. So in other words, it doesn't look like gold is getting away from us right now. I would absolutely be a seller of rallies unless the gold breaches these lines I have just shown you, gets above the head of this head and shoulders, and starts to show us it's got some legs. If that's the case, we'd immediately flip to bullish. For now, the OMNI's still bearish. I would expect the gold to be a seller of rallies, but we're not trading the gold for OMNI on Thursday. Traders, don't forget that the market is basically the Dow Jones Industrial Average, right? The DJIY. This is the market. This market looks like it's coming down to this question mark. I don't know if it'll do it all the way, but I say tomorrow it will certainly give an attempt to end up down here somewhere. Traders, thank you so much for coming to my video. Come to livewithoscar.com. Please join me in my live chat room. We love having new guests. Always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And boy, oh boy, you should say this to yourselves a lot. And you know what that is. Stops are in. Emotions are out. Rock and roll, traders. Thank you for coming to video 1081, and I will see you at livewithoscar.com.